Well, good afternoon, everybody. I'm Dave Weisberger, the CEO of CoinRoutes. It is June 23rd, 2023. It's time for This Week in Crypto, our weekly recap show. And we're going to talk today about the markets for the first time in a while. And 5 other news stories that I think are important and may be very well driving the markets. So let's talk about what's going on in Bitcoin. Well, Bitcoin's exploded upwards over 10% over the course of this week. Right now, it's sitting very close to $31,000. And you can remember that we were talking around a $26,000 handle last week and for weeks before that. What has been happening? Well, the reality is this move has been featured by spot buying with very little liquidation. When you look at the chart that you see in front of you, you see liquidations, which are basically what happens when speculators push the market too far and then have to panic buy or force buying from liquidation engines covering shorts. That isn't what's been driving this market. It's been spot buying. We've been saying for a very long time that there's reasons that this would happen. So let's talk through the base case. As you know, we've been focusing on the Bitcoin hash rate and how it's diverged from price over the last, basically since the Luna debacle in 22, a little over a year ago. And so you can see that chart in front of you. Next, we think about what's been going on. I've been talking for quite some time about accumulation. And when you want to understand accumulation, you look at how much long-term holders have been net buying. And that's been going on for 6 months, as you can see on this particular graphic. So now you add that up with the fact of the matter is that the percentage of long-term holders is at an all-time high, and you see that on this graphic. And now you have what a forest management situation would be. You would say a lot of dry kindling. And so there's a lot of reasons, there's a lot to go on. There's not a lot of supply. But as of before this week, was there a lot of demand? Well, what happened this week? Well, this week was a delayed reaction slightly to the BlackRock announcement we talked about last week. And we're going to dive into BlackRock and some of the fallout for it when we talk about news stories. At the same time that you see starting of a turning point with regard to the U.S. regulatory situation in the SEC. There have been a whole variety of news stories. We're going to categorize them. But effectively, keep this in mind. There is really not a lot of supply. Supply is at an all-time low. And we've seen long-term holders making that supply go ever downward. So it really doesn't take much. This could literally all be from one major long-term buyer. Most likely there's more than one. But the reality is, all of a sudden, people that are looking for the market to crash are like, uh-oh, we really were wrong. In fact, the stock market's been a bit squishy this week, but the fact of the matter is they haven't rampaged higher, but they haven't crashed either. And so we're sitting in a situation where the Federal Reserve is talking about, we may raise rates again if we need to, but nobody's focusing on that in any risk asset market. They're more or less looking at this as the Federal Reserve priced in. In fact, the end of the year, it's been priced in the bond market that they're going to raise rates 2 more times. So you have this situation where Bitcoin is going higher, but I am going to make a point here. Remember, Bitcoin trade like an option on its own future adoption. If Bitcoin achieves digital gold status, i.e. becomes the monetary vehicle of choice for people to hedge against currency debasement, you're looking at somewhere around 20 times the price that we're at today. In fact, the price potential of Bitcoin is so large that if we're right in the next 5 years, and I do believe it very well could happen in the next 5 or 10 years, then the squiggles that we're talking about as big moves would not even be recognizable on the chart. So conceptualize that for a second and put all the news focus into the proper context. So let's talk about the news of the week. And the story I want to talk about again for a second week is BlackRock. But not really about the implications of BlackRock per se, but that there's a common criticism. The crypto industry seems overwhelmingly concerned with BlackRock ETF applications signaling a TradFi takeover of crypto. In fact, I've heard multiple people, and I got into it in Twitter Spaces with people who said this was caused excess financialization and excess leverage in the system. And oh my God, they're taking over for Bitcoin, which the whole point of Bitcoin is only 21 million, et cetera, et cetera. To that, I call bullshit. And the reason I call bullshit is because an ETF is a fully backed product. It is a trust structure where how many ever Bitcoin are in the trust. That's it. Yeah, you can short it, and maybe there's some amount of rehypothecation involved, but it's negligible. It is not the same as a futures-backed ETF. And make no mistake, it is not remotely surprising that a futures-backed ETF signaled a local top in the same way that the introduction of Bitcoin futures back in the previous bull market signaled the top of the market. Because when you have futures, it creates paper Bitcoin that makes you able to short it. But an ETF does nothing of the sort. The ETF is actual Bitcoin held in Coinbase's custodian. That's what is being pitched here. It is very, very different. And if you look at the effect of GLD and IAU on gold price, you can see it. It was very specific. It took supply out of the equation and made it much harder to manipulate. Because gold, where gold futures are much more liquid than gold spot, allowed people to manipulate the market. That's why there have been billions of dollars of fines. Billions with a B. That's in fines, not in market price. So understand that the ETF is undeniably not the financialization engine. What it is, however, is a means for grandma, grandpa, and all the people who are not technologically sophisticated enough to be able to self-custody Bitcoin to put Bitcoin in their portfolios. As I've said before, financial advisors right now have no way to put Bitcoin as a small percentage in clients' fully diversified portfolios. Registered investment advisors have no way to put Bitcoin in those portfolios. However, with a BlackRock sponsored ETF, they will have a way. If you consider the fact that there are two objections that people have made, one is they can't, and two is they're afraid. They're afraid of custody. They're afraid of losing their keys. They're afraid they won't be able to have their estate planning work because it's more difficult if they self-custody. BlackRock comes in, and now in any brokerage account, which any human being understands how to do estate planning, understands how safe it is. Understand that in this structure, there is no risk because BlackRock is the world's largest investment manager. What happens if, God forbid, they lose the keys? Well, they're probably going to make good on it. Now, is that going to actually happen? Not really. But in terms of public perception, it is massive. So this is a very big deal toward getting to global adoption. And that's why the price is rallying. It's a long-term thing. Now, let's be clear. This is not one of those wall of monies coming like, the movie The Day After Tomorrow, where there's this huge tsunami about to hit. That is not what's happening. We're talking about a trickle and the slightly larger and the slightly larger, and eventually it becomes incredibly significant because now people can, or if it gets approved, people will be able to first start pitching the idea to their customers of making small allocations to Bitcoin. So people who expect a torrent of liquidity the day it gets approved, I don't think that happens. I mean, yes, speculators will probably push it up when it gets approved, but the reality is it's really kind of a slow building thing, which is exactly what the Bitcoin community wants. So should we be worried about a TradFi takeover of crypto? Well, look, the regulators in the US clearly want that to be the case. Does this mean that? Absolutely not. And that's important. Okay, 4 other news stories we're going to talk through. We want to talk about the Binance accusation of the SEC next. So Binance has put out a letter accusing the SEC's enforcement division of unethical behavior, signed by former SEC enforcement attorneys. This is kind of a big deal because what the SEC has done with Binance, as I talked about 2 weeks ago, I think violates their due process by using social media to publicly declare Binance as, I won't dignify the comments that were made with repeating them, but basically to try to convince Binance customers to create a bank run against Binance. That is literally the opposite of due process. It's almost like the SEC thinks they're above the law. And so this accusation, I think, is serious and will chastise people. It's part of a campaign on the narrative side to make this SEC politically toxic. And to be honest, it seems like it's working because another news story, which we'll talk about, which I don't have to talk much about, is something that happened recently, which is the SEC decided to step away from their claims against BlockFi where they were in front of investors because they recognized that was a terrible look. That is a good thing. And the SEC stepping away from that claim is good for investors. Optimistically, maybe the SEC is turning the page. They're going to care about investors more, but I doubt it. But in any case, to get back to the Binance point, it really is important to understand that a government agency is actively campaigning to destroy a private business before they give them their day in court. That is non-trivial. And it's good to see serious people calling them out on it. And the same token, Chris Giancarlo, the former head of the CFTC, has made the accusation that the SEC's suit against Coinbase was clearly timed for political motivation. Now, you may recall when it happened, guess what? I said it too. I said, look, this feels like narrative control. They didn't want the narrative of the Agriculture Committee and the Finance Committee working together to create a realistic framework for crypto, a framework which, by the way, on its first precept is no regulation by enforcement. It's great to see senior people who have been in the government to actually say this is probably what's happening. So I can take a little victory lap on that one. But what's really important here is we're starting to see a repudiation of this approach. It's its early stages right now, but that is what is needed for the next big leg up in this technology and for the U.S. not to lose what I consider to be tens of thousands of jobs at a minimum as they all migrate overseas. The next big story this week is PrimeTrust. PrimeTrust, which we may remember a couple of weeks ago, was teetering on the edge of bankruptcy, and BitGo was going to buy them out of bankruptcy. Well, unfortunately, after concluding due diligence, BitGo decided to say no and pass on the deal. So the Nevada regulators said nope and shut PrimeTrust down. Now, from a rhetorical point of view, from a narrative point of view, this looks awful. This looks like a regulated custodian failed. How could that happen? And it gives more arms to the anti-crypto army. In an actual statement, their business had dwindled so sufficiently that it's probably a pretty negligible impact. I mean, as far as we know, it's somewhere between $1 and $200 million of assets, and we don't know what the size of the hole is. So it doesn't seem like it's going to have a very big effect. But it is a big problem, a big black eye for the narrative. But there's something else here that needs to be discussed, which is PrimeTrust was regulated. And the regulators keep telling us we don't need new rules. We don't need new processes. Well, if that's true, then why is a regulated custodian failing to hold on to customer assets? Why isn't the oversight, shouldn't it have picked this up a long time ago? Well, the answer is yes. But the reason is because the oversight that regulators are currently using is outdated. It doesn't work for crypto, which has been basically been my contention for years. It continues to be my contention on many, many levels. We need new, focused, principle-based regulation in this particular case to protect client assets. And we've talked about other reasons in other episodes. So those are the news stories of the week. I think it's important. I want to go right back to BlackRock for a second, because the other big problem is people don't understand what this is. And the Block had a really good report, which basically said, listen, this ETF would be the gold standard. Now, what do they mean by that? It's a play on words because it's very similar to the gold ETFs, but it also means that people can trust it. So if you understand what's at stake and you take the Bitcoin move, you take all these news stories that kind of show a narrative shift starting, and you take BlackRock going out with a proposal that could literally create a confident vehicle for people in an unlevered way to invest a portion of their portfolio in Bitcoin in the gold standard of ETFs and exchange traded products. That is a good story. And that is why the market is running this week. But we shall see. It doesn't feel to me like this is a cataclysmic event that's going to propel us to new highs automatically. But remember, we came down from the 60,000 range about a year ago because people lost confidence in the market. If we start seeing things such as an expedited approval of this, confidence could return very quickly. It's the kind of thing that is probably making the anti-crypto army sweat, probably making them rethink their stance. One last note on that, which is kind of an interesting side note, is the IMF came out. And the IMF said banning crypto is probably not the right approach. which is kind of a veiled, interesting argument. We all know the IMF hates Bitcoin, and they actually were talking about stable. This was in the context of stable coins. But the fact is when the World Economic Forum organizations as a whole, who really don't like what's going on in the digital asset world, recognize that banning is a terrible idea, and a better idea is to try to sneak in and regulate it. It's telling you something about where and who is going to win the ultimate battle. But for now, let's just take the W. Let's take a good week, a nice set of returns, enjoy the weekend, and stay safe.